All right, welcome again to this week's weekly Elliot Wave weekly market analysis webinar. Today we're doing it on a Friday. We usually have this webinar on Mondays at 18 hours South African Standard Time or 16 hours GMT. But I think it's even better to have it on a Friday in preparation for the week ahead. We've got a couple of charts that we're gonna go through. As you guys know, I only just go high level on this chart, on this webinars, but the details is normally given on the premium group, specific entries and strategy as to the execution method that we give in our premium group. So we're gonna get started now. I'm gonna try and go through this in alphabetical order, right? So most of the charts are in 4-hour time frame. Unless I change it somehow, but that doesn't mean that I analyze only on the 4-hour chart. So the labeling, so on all these charts, is labeled from the monthly all the way down to the 1-hour chart and sometimes the 15-minute chart. Okay, so what we're looking here is the Euro US dollar chart. Okay, I've indicated a couple of times why I've labeled this chart the way I've labeled it so far. Okay, why I think the move to the upside is not yet completed and what could possibly happen and the possibilities that could happen here. All right, so as a start, we've got the 1, 2, 3, 4, 5 in yellow. I'm just gonna indicate it. Just get my pen out. All right, so we've got this one, clear 1, 2, 3, 4, 5. So I always ask why, I mean, if two different Elliott wavers are getting levels at different turning points, why is that? It's because they do not have a clearly defined strategy. They do not have clearly defined turning points. So I've explained in one of the webinars that the three of an impulse wave should always be at more than 1.618 extension of 1 to 2. Right, so how do we test that? I'm just going to do that quickly. I use the extension tool. There's a difference between an extension tool and the retracement tool. If you don't know how to use it, go learn how to use the extension tool. So I use the extension tool from 0, and I'm checking the wave 3 here. So this is my 1618 here. As you can see, minimum my wave 3 should be above this area, this wave 3, because I'm looking at this 1, 2. I need a 3 in yellow. Okay, so I need a 3. So normally after checking this, I would have thought, okay, my wave 3 should initially be here. Minimum, it should be above this level, right? But then I've got this internal one here, but it's not normally a lower degree. This is what we call a nest. A nest is when you've got an extension within a wave, right? So nests, we cover that in our course. So here we've got a nest. We've got another 1, 2 in here. So if we've got another 1, 2 within a perceived wave 3, so we need to check where the minimum wave 3 for this 1, 2 is going to be now, right? So we do the same thing. I'm going to take this one off. Okay, so I'm going to take this one off. So we know that minimum wave 3 in yellow should be above this 1,618. That is 1,618 for this. Okay, so I'm going to take that out. So this is actually educational, right? So let's just do a bit of education for a start. All right, so this is with 1 to 2 as well. All right, so you can see with 1 to 2 extension, also the minimum should be above this level. It's around the same area. All right, so if we were to label here, here's a nest. We've got a higher wave, a higher degree in yellow, a lower degree or a nest in the red. That's just 1 degree lower than this one. And then we've got this another degree here, as you can see. Because you cannot say 1, 2, 3, 4, 5. I mean, this is just here. Nothing is happening here. All right, so we've got another nest inside here. So we also need to check this one. You can see this. There could be another 1, 2, 3, 4, 5 here. So let's check that one as well. Take that out. Take my extension tool. So I need to start this one. This is the green degree now starts from here to the 1, back to the 2. Can you see that now? Can you see that now the green degree should be minimum at this area there? Okay. Right. unless it is an ending diagonal. So we already know that we've got the green degree that whose wave 3 should be a minimum above 1,618, which is above that area. So my wave 3 higher degree needs to be at least above here. It needs to be above the green degree, obviously. So I'm going to push it out. My red degree needs to be above the green. So obviously the 3 should end here, where wave 5 of the lower degree ends. So that's my wave 3. So as you can see, this is a correction. You can see this degree in wave 4. Right, so sometimes the degrees, you need to have a trained eye. You need to be able to have to spot these things. So the more you spend time on the chart, the more you'll be able to spot these things. So I've got 3, 4. So I need obviously a 5 in red. Okay, so I'm going to get my 5. Or this 5, you also need fibs to confirm if it has reached a minimum level to be a confirmed wave 5. And I'm not going to go through that, otherwise this webinar is going to be very long. I'm only going to do this for this one chart, but for the rest we're just going to discuss what we're looking for the market ahead. So now I've located 1, 2, 3, 4, 5 in red. So my wave 3 should be right on top of the 5. So this is why I think this is a wave 4 in the making that is currently building in here. All right, so the rest of the labelings don't matter anymore. It doesn't help us with anything. These moves have already played out. So we need to know what's going to happen where we are currently. And where we are currently is in wave 4. And how do we trade wave 4? So what we know so far is that we are in wave 3 of the yellow degree. And this needs to be completed in order for us to get to a wave 5. And what do we need? Why do we need wave 5? Because wave 5 is going to be a big move, maybe giving us another 300, 400 pips. So that's what we're anticipating. You can trade here the small moves here. We've tried trading a couple of these moves and we got stopped out in a few trades because we are within a correction. You can see this trade goes down from 1,2092, and then it goes to 84. That is about 100 pips. It goes 100 pips down and it goes 100 pips up. 70 pips up, and then it goes another 130 pips down, and now it's retracing again. So this is why you do not want to trade in the correction unless you are experienced and you can actually trade these moves, and they take forever to play out these moves. Right, so you don't want to be in these trades here within this correction. So you want to trade when you are sure that wave 4 is completed or we are out of the correction. So that's what we're looking for here. So that's my wave 5 in red. I believe my wave 5 in red is being corrected. Is being corrected by these 3 waves here. This is WXY. Okay, let me label this one properly here. I'm going to take off all these fibs that I was using to test the wave 3 validity. All right, so if you look here in wave 3, we've got 1, 2, 3, 1, 2, 3, and this 1, 2, 3, 1, 2, 3 does not break the top, or we're getting this extension to the bottom here. That is expanding, that is going down as an impulsive 5 waves, 1, 2, 3, 4, 5 in the green degree. So currently, as it stands now in real market live now, where Euro US dollar is going up, right? And I believe it is completing this wave 4 of the green degree. Okay, so why was I showing you this here? Because that's how a flat. This is a flat in here. So that is why I label it. That's why I label it a WXY. So WXY, which is our 3 waves. After these 3 waves, we anticipate that Euro US dollar will then go. Okay, unless it makes. Let me clear all that. The only way it will not go down immediately, there's a possibility that it can make. You see this, if we've got this WXY here, let's say this is completed. This is going to complete somewhere here. If I just take an arrow to show you my projections here, this is wave 4 I believe we're gonna go down to complete this wave 5 of this expansion, and Euro US dollar will complete these 3 waves there. Then after the completion of those 3 waves, let me clear it quickly. So after the completion of these 3 waves, 1, 2, 3. So if it is completed there, then we go. Unless if it does something like this. And you see here, I'm just drawing pattern. If it does something like this and then we get an X here, which is a connector, and that X will not be in red, it's gonna be in yellow. Then this whole correction will be a W, X, and then we get a Y. You can see I'm being cautious of drawing this Y below this line. I'll show you what the significance of this 38 level is. So what we'll then get after that is you could get another correction like this, and the whole thing will give you 1, 2, 3 waves, and that will complete this yellow wave 4. Just undo. That will then complete this yellow wave 4. All right, so then we go for our wave 5, which is what we anticipate. So we just need to get out of this channel. So if we get out of this channel and this starts going, then we're gonna be trading this to the upside. But for now, it's just within this channel. Don't trade within this channel. Wait for it to break outside the channel before you take these trades. Okay. Right, so that's how Euro US dollar looks at the moment. You're gonna lose a lot of trades here because these moves are quite short and not clearly defined. So rather wait until you are out of the channel. When you are out of the channel, this is what you're gonna get. You're gonna get some sort of a flag here that will confirm to you that you are ready to go. And then we go for that wave 5, which is the final move that we're looking for on Euro US dollar. So back to this 38 level here. It's just one of the rules that that needs to be applied as well. So usually wave 4 retraces around, okay. In the Elliot wave theory states that wave 4 should not be in the territory of wave 1, which means this wave count can only be invalidated if wave 4 comes into this territory. But I normally, with experience, wave 4 usually retraces around the 38 level. So if this retraces more than 38 or maybe more than 50% of this whole swing, then I'm going to invalidate this swing and label it differently. But for now, 38 remains a support for this wave 4 to be in place. And you will see that whenever it gets to this level, it will remain supported. Okay, so this is what the possibility is going to be here, and what you need to look out for. You're going to get this 1, 2, 3 up to this level, and then we go. Or as I said, I'm going to repeat it again. You're going to get 1. You're going to get 1, 2, 3, and then you get an X because you need double correction. The correction will not be enough. When you get double correction so that you can get even more retracement, right? So if you get a double correction like this, don't be surprised. That is also a possibility. So it could fool us, and we think that it's going here, all right? But this is how we trade. This is how we trade it. So even if we do not know whether it's going here or whether it's going to go there, let me show you how we're not going to lose money. So when we see that we are getting an impulse here. We'll do that impulse in yellow. When we see that we're getting an impulse here, obviously we're going to think, right, it's ready. It's going to make a flag. When it makes a flag, we're going to buy it here, just above the flag at the completion of the, my drawing is skewed. We're going to buy it above the flag here. We buy. We put our stop loss here. After it moves a few pips, we're going to put our stop to break even here. So after putting our stop to break even, we let it run. If it comes back, then it's going to hit out for no loss. Right, so then we know that it's going to complete this wave Y. And I'll show you a clear example of how the market always makes a double correction while you're waiting for it. Right, and that's the next pair that we're going to go look at now, which is the US dollar CAD. So we're going to look at US dollar CAD. It's the trade that we're currently on a short. Right, so let's look at US dollar CAD. Most of us entered it right at the peak because we've been anticipating this. It's always good to anticipate the market than chase it. We do not chase the market, we anticipate. We waited for this trade. Okay, I'll show you how we waited for this and how we traded this. Right now, the trade is ongoing, and if you missed it, there's still an opportunity to enter, and I'll show you why. All right, so as I said, I'm not going to go through all the analysis. As you can see, we've got an impulse. We also have a long-term running trade that we took right at the top. You can go check some of the previous videos to show how we took it right at the peak here. This is exactly at the 100% extension. All right, so we've got this impulse that is currently going. So our target, overall target for this pair is 1.55. 1.55. 1.55. So here we had this correction here, which we clearly labeled. So I'm going to show you something with these corrections. Right, so I'm going to zoom in into the 1 hour chart and show you the possibilities and what happens and how you should always have an alternative count when circumstances change. And here things changed pretty quickly, but we were anticipating this change. Right. So this was our impulse. So that impulse starts from right at the top. So I'm going to show you just from here. So this impulse started correcting like this. We started getting these 3 waves here. 1, 2. Right? So when we were here, I knew that we've got a W, we've got an X. So if we've got a W and an X, it's easy to get a Y. We just need to get this thing to be equals to this one. Right? So we knew. So all we needed to do was this. To get top of W here. Just get a blue line to show where we were planning to buy, to sell this thing. So we were planning to sell it. Control that. Just go. So W, X, Y. Actually, it should be like this, should be a bit longer. Right. Get this line on here. So I was planning to sell it here at equal legs. But now I'll show you why that move never happened. So what happened is, we were waiting for it here. We were waiting to sell it here. And we did. Okay. So when this pair made this 1, 2, you can see even if this is here, let me just do this with a fib too so you can understand why we put it there. Fib extension from here to there and back. Let me get all this clutter out. Right, so you can see that I've just located the fib at the equal legs. You can see that my fib corresponds with the equal legs, right? So this is where I wanted to sell it. So as soon as it entered here, I had a sell order here. So I sell here. I sell here at this area. So all I have is a sell order, and you see, look what happens. It goes down, We make a few bucks. All right, so after making some money, obviously as soon as it goes below this flag here, I move my stop to break even. Remember, I sold it here. This is my selling point. So when it moves a few pips to the downside, I put my stop to break even. So look what happened. What happened is now it came back and took me out. So what happens when it takes me out? It's making a double correction. It moves down, comes back, takes me out for no loss, right? But that's fine. That's trading. You can't wait on everything. But when it did that, I knew that it was going to do a double correction. Look what happens now. So we had this WX, Y, okay? It ends here. But then it becomes a big W, a big X, right? And then a big Y. So this now must be equals to this. So now if I do that, if I locate that C again, you see where are we wanted to sell it again. I'm going to locate it. I'm going to take out this initial buying area so that we don't have a lot of fibs here. Come back to X. Look where we sold it again. And this is where we've got the trade now. See, we sold it on this line. 2473. As soon as it gets in the blue box area, we sell. So it doesn't matter whether it's not going to go now, if it's going to make a triple correction. Right now, we're going to, as soon as this flag here breaks to the downside, we are moving our stop to break even. And then we just let this trade run. There's still 1,000 more pips to the downside on this trade. Okay, so this break of this flag will confirm. Okay, so those who have not entered this trade, if it breaks to the downside, you can put your stop loss, your sell stop under this flag here at around 124. And this trade will go then all the way for 1,000 pips. And you see you're going to be targeting 1,000 pips for a very small stop loss. Okay, so that's USD CAD. Let's discuss other pairs now. So this, hopefully the rest are not going to take so long. Let me just check. I think there's a question on the chat box. Can you explain about the trend reversal within indicators? Okay, so that is divergence, Adnan. If I'm getting to a pair with the divergence, I'm going to show you divergence. That's the only indicator I use is my MACD divergence. It's MACD or the RSI. Okay, so let's carry on. So that's USD. We've discussed USD CAD so far and Euro US dollar. The next one is Pound in New Zealand. Let's look at Pound in New Zealand. So that's the trade here. You can see that it's almost breaking to the downside. So a break of that flag will then confirm downside. Okay, next one is Pound in New Zealand. Pound in New Zealand is a very interesting one. Loading Pound in New Zealand here now. Right. I actually did this one this morning and it's following this thing here. So I just don't like selling these short-term trades. But if you wanna, this is a bit late. You could have sold this one. You could have sold this one here. But yeah, let's look at why I have this analysis here and why I think it's gonna go down and then come back. Let's go for our chart. This pair is a very clearly defined structure. So I'm gonna do this first. Look at it higher first. So this is your impulse, first of all. The rest of this, everything here, correction, right? So we need to understand what's happening with this correction. Let me clear everything out now so that we can drill down into this correction. So look here, focus on the blue degree now. Focus on the blue degree and see what I'm seeing, and so you can see how I look at the markets. So when you look at the blue degree, I'm seeing 1, I'm seeing 2, I'm seeing 3 waves. So I want these 2 legs to be equal. So until this leg is equal to this one, my sequence is not done. And this does not happen on any pattern. So there are specific patterns where this happens. And that's what you need to learn when you do the training or the course. All right, so for this one specifically, we want this to be equal to this. We want equal legs here. So this is why we're anticipating this move to the upside. Okay, so I label the higher degree WXY. Lower degree, anything within. Okay, let me leave my connections in here. WXY, lower degree, red. WXY, it's just a lower degree of what we have here. So here, obviously, if you go to the lower time frame, you will see that this goes down and then you get 3 waves there. All right, and then here also, it's either you can have one of 2 things. You can have it as 3 waves. So because it was 3 waves here, that's why I have it as W. And now here we're getting an impulse. So this whole yellow is a zigzag. Okay, so this zigzag is forming an impulsive move 1, 2, 3, 4, 5. So we need to come and look here for this 1, 2, 3, 4, 5. We already know the main direction is up. We need this to complete and be equal. right? 3 waves, 3 waves, 5 impulsive waves. This could have been 5 impulse, but it doesn't have to be. If it's not, then we label it a W. It's not. We don't label it a 1, 2, 3, 4, 5. We do not force labelings. That's why you need to have a clearly defined strategy that tells you when to label 1, 2, 3, 4, 5, when to label ABC, when to label WXY. Okay, so now we are looking at this string here. This is the last string. So before you even look at this labeling, let's just look at the patterns first. Look at the patterns. Let's look at the patterns. If you've learned the Elliot wave patterns, then you'll find this very interesting. So we get an impulse first. I'm going to label all the patterns in red. Right, look at this one. 1, 2, 3. If you've read the patterns on your book, you'll see that this is an expanding flat. What happens after that? You get another impulse. Okay. What happens after the impulse? You get a 1, 2, 3. See? Repeat of that. Né? This, repeat. Look what happens again. You get another impulse. What happens now? Repeat. 1, 2. What's supposed to happen now? It's always an impulse. 1, 2, 3. Impulse. 1, 2, 3. Impulse. 1, 2. What should happen now? It's obvious. It should go down. Only one way. So the only thing that we're not sure of is whether it's gonna break this and make an expanding flat, but we know even if it's an expanding flat, this needs to tend to the upside. And the upside is also confirmed by the fact that that string needs to be equals to this string. Okay, so some supply and demand traders, support and resistances traders will be thinking, okay, maybe even draw a trend line here. Maybe even draw a trend line here. And then when it breaks here, you say, okay, it has broken, now we're going. Okay. But if you do not know the sequence, because we know the sequence, whether it breaks, breaking the trend line doesn't mean anything. If you know the sequence, you know that the upside move, the bullish upside move is not yet completed. So you will see that here, I have this analysis here. I want this to complete to the downside. And you can see that all these purple lines are pointing to this, all these corrections. They're also similar, fractals, they repeat themselves. So these patterns, they're all in the Elliott wave theory book. And if you do not understand them properly, you won't be able to apply them, identify them in a real market. So this is a very interesting pair. So even if you do the labeling, 1, 2, you can see I've got a similar situation where I believe that wave 3 is not yet in place, but I know I've got 1, 2, 3, 4, and then I still need to get a 5 in red to complete. So I've got a couple of pips to the upside to complete up until 95. So how many pips is that? It's about 900 pips. Actually, from here, from 83 to 96, that's about 1,300 pips to 960. Okay, about 1,300 pips more to the upside if you get a proper entry to the downside here. Okay, so you need to watch it when it comes here, right? So if you're a short-term trader, you could be trading this to the downside now, but I do not like these short moves. That's why you see most of my charts are worth a couple of 100 pips, right? So this is the 4-hour chart. So how are you going to trade this? When we get here, and normally what always happens is after the completion of this pattern, this is what happens. You'll find a sharp move to the upside. It will break and break. So I don't know how the market makers work. So maybe this is how they work. They break these lines, but whenever they break this line and people think, oh, market makers are doing this and that, they broke the support so that we can give us a false breakout. I don't believe in such thing as a false breakout. For me, it just explains the pattern that needs to happen. And so if it does this and it breaks down here, it's just giving me a regular flat or an expanding flat, and then it goes. So because I'm anticipating it, I don't worry about the market makers. Okay, so that's pound New Zealand, very interesting one. Keep an eye on it. Okay, let's look at USD JPY. Let's clear everything now. Just check the questions quickly. Can you please explain about the trend reversal with indicators? I've already answered that. Anthony, Victor, are you setting a sell limit or doing a market order when price is coming back down? Question pertains to lesson down on the euro and CAD. So on CAD, Anthony, we've already taken a shot right at the top on that on the blue box that we indicated. So what I'm going to do is I'm going to take another trade in there. I'm going to move the first one into break even, and I'm going to take a second one. Okay, so it's up to you what you need to do. You can either just run your trade, move your stop to break even, and just run the trade as it is. So what I'm going to do is when it confirms below 124, I'm going to put in another trade. I'm going to put the first one onto break even. Okay, so I'm only going to have one risk, a risk of one trade. Okay, so what I normally do, because I risk 2%, what I do is whenever it gets into my sell area, I sell half of what my anticipated position is. So I risk 1%, and then when I get another second confirmation, I put in another 1%. So that's what I'm going to be doing. Okay, right. Next one, US dollar JPY. US dollar JPY, pretty interesting one as well. We've made a couple of bucks on this pair as well. So here we just need to look at the pattern. Let me take everything off here. Just every labeling off. Okay, so this is what you need to do. So forget about you're looking at a chart, you need to see where the 1, 2, 3, 4, 5 is. Forget about 1, 2, 3, 4, 5, A, B, C, X, Y, Z. Look at the pattern. What is the pattern doing? So this is what I'm seeing. So what I see is 1, 2. So what do I want? I want a 3. Okay. So, and what is this correcting? It is correcting this whole move here. This is my impulse. This is what we are correcting here. So everything here is just correcting this impulse. Okay. So that's what you need to do when you look at the market, when you're doing Elliott waves. Forget about the labeling. The labeling, you put it after. When you understand your patterns, it's very easy to label your chart. So what do I have? I've got a 1, 2, 3. So I'm anticipating that US dollar JPY will get to 104. How am I anticipating that? Because if I do my equal legs there, and I can do the equal legs with the fib as well. Okay, unfortunately, when I do this, so you can see this leg, just focus on this leg. I'm going to take off the labelings again. When I do this equal, I want the leg, this leg, which is the W in purple, from X in purple to come and complete the Y in purple. So I'm going to have this then to be a 1, 2, 3. So this is why the overall target for US dollar JPY, unless the structure changes, is going to be 104. So let's do this properly. Let's take off the labelings again and identify the patterns. Okay. So that's the first thing I did now. I've got one. I've got the impulse, and then I've got 1, 2, 3, right? All the way up to 104. Okay. Let's look at the lower degree. Lower degree, exactly the same thing is happening here. Can you see? Right? 1, 2, 3. It's another zigzag. So we've got a zigzag in yellow that we are anticipating to complete. And then in here, we've got another zigzag here. But this is the subcorrection. This is just the lower degree of this. Maybe let me put in the ABC here. Even though actually it's actually WXY because it's 1, 2, 3 waves. 3 waves, we call them W, right? We don't label it as 1, 2, 3, 4, 5. It's WXY or ABC. Okay. So we've got a WXY in red and in WXY in yellow, and then we've got also WXY in red. This is all WXY. See, I'm just going lower degree. I'm just filling in because I've identified the pattern. So now the labeling is easy. The lower, if I just go to the lower and lower time frames, then it's gonna be easy. So now we are here. I see a 1. I see a 2. 2 things could happen here. Remember, the correction is not only a zigzag. We've got flat corrections like here. Here you've got a regular flat. You can see you've got a regular flat here, right? It's not a zigzag. Okay? So now there are 2 possibilities here. This pair is going up like this, right? But the extreme here is this one because this swing starts here. Remember, this swing starts here. So if we are looking at this swing, let me put this marking in blue here. So you see, this is where it starts. 2 things could happen. We could have, just get the red color, we could have this retracing here and going all the way down to 104. What is it going to give us? A zigzag. Or we could have this, we could have this extending, breaking this top, and coming all the way down. What is this pattern then going to be? It's going to be an expanding flat. Okay, obviously it may not break, the expanding flat may not break all the way down to 104, but if you look at the 161 extension of 1 to up to here, and it go 161, you'll find that it's around the 104 area. Okay, so that's what we're anticipating. US dollar JPY is going up at the moment. So let's look closely and see what's going on in the lower time frame. So this is just to indicate the direction, and you see how easy it is to label. For the rest, it's just filling in. You just fill in because you've got already the main direction, the prevailing direction of the trend. Currently, obviously, this is not trending. It's correct. It's a correction. So I'm going to clear everything. Now we're going to come here and see what's going on, whether we are still moving up or whether we're going down. Okay. Right. Let's get that labeling on again that we had switched off. Okay. Don't let all these letters confuse you. Just focus on what we are looking for here. So here I'm already looking at US dollar like this. So now Adnan had asked, how do I use an indicator to forecast reversal? Okay, so this is what's going to happen here. So we've got 1, 2, 3 waves there. So what is happening here is, this is making an expanding diagonal here. An expanding diagonal is a reversal pattern. Okay, so I do not know when this is going to reverse, whether it's going to reverse at the break of the extreme, that blue line. Remember the blue line I spoke about? This is where the string starts. That's where the string starts. Just need to do it again. So this is the blue line where the string starts. If it breaks it up here, it will come and give me an expanding flat. Okay, but right now it's showing me that it still needs to move up. Why is it showing me that it still needs to move up? Because it's making this corrective structure here. So it's giving me a flag. Maybe we'll pop up to the upside again. I do not. It does not have to break. It can even just touch or reverse. Yes, anywhere around the 90% retracement of this string, or to about 135 retracement. Okay, if it retraces by more than 135 or minus 35%, it's fine, right? But it will go down eventually. So why do I think it's going to go down any moment? And why this upside is not so safe? Okay. I do not think this, okay, we're going to get some upside, definitely, right? But it's not safe. It's not going to be a big move. But look at what the divergence is doing. So Adnan was asking, how do I use the indicator to show a reversal? So this is telling me that even though the price is going up, there is no momentum. Momentum is going down. So which means the reversal anytime is imminent here. Right. So even though it's going up, we're anticipating a down move. So how are we going to trade this if this reverses? Because that's what's important. So if it reverses, what you do is, if it goes up here or here, whatever, doesn't matter. If it breaks this trend line, gives us a bit of a flag like this, then we're going to sell the break of this flag. This is a bit aggressive here. It's safer to sell it here, to put in your sell stop here. Okay, so this is how we're going to do it. And then we're going to ride it all the way down to 104. Okay, so that's how we're going to trade this one. We still have a bit more upside left on this pair. Okay, hope that's clear. See, and there's another question there. Would you then change the USD JPY labeling to ABC etc if it does go to the upside? It will only be an ABC if your A has got 5 waves in it. If your A has got 5 waves, then it becomes an ABC. Only then I will change. Okay. Right, so let's carry on. There was USD JPY. Just want to check what I have on my list as well. Again, Pound Audi. Let's look at Pound Audi. And I'm going to do Euro New Zealand. That's the chart that I keep sending. I'm waiting for a big move on Euro New Zealand. So I'm going to do Euro New Zealand after this, after Pound Audi. Okay, I don't know why it's loading a bit slowly. Okay, right, here's another interesting one. Very interesting. And it's doing exactly the same thing as the pound in New Zealand. Okay, let's look at the higher time frame. What's going on in the higher time frame? Not necessarily, not that high. Okay, obviously high is relative in this case, right? My chat does not want to load. Let's see what's going on here. £1 Audi. Connection is a bit slow here. Any minute now. Let's get £1 Audi out. Technology is letting us down here, but it's going to come up now, no? Just try and close some of my programs that are running in the background. Maybe that's what's slowing us down. Let's close all of those. Oh, sorry, I had forgotten to unmute myself there, but I'm back on now. Okay, I'm on now. I'm on now. You can all hear me now. Okay, the connection is back on again now. Okay, let's carry on. So, where is the impulse? If you look and you zoom out higher, you will see that this was, I'm just putting on the indicator. This is the impulse here. And after the impulse, look what I'm having. I'm getting a 3 waves there. But after these 3 waves, I'm getting another 3 waves. See that? So if I get 3 waves, I label them as a W. This W is representing all this whole swing here, this whole move, this 3-wave move. I label it as W. So because now it's making a double, we obviously need to get an X, and that X in this degree is going to be this. So if we got a W and the X, we obviously need to get a Y, right? Right, so that's what I have. So I need to get a Y. Where should this Y end? Where does the Y end? That's what we need to check. Same thing that we do again. Equal X. For this specific pattern, we can get equal X. So we need this Y to end at about 180. So 180 from where we are currently, we're currently at around 170. So that's about 1,000 pips to the upside. You don't have to trade it all at once. You can just take it in bits and pieces. Okay, but let's look at what happened. So we've got the W, we've got the X. Okay, we also had a fractal here. I keep repeating this fractal, maybe boring for people who are regulars, who watch these webinars regularly. Let me just do it quickly. So you've got a 1 here, you've got a 1 there. You've got a 2, 3, you've got a 2, 3. You've got a correction wave 4, you've got a correction wave 4. After wave 4, you get an up, move to the 5, you get an up, move to the 5. So then after 5, what do you get? You get a dip and then up. What do you get here? You get a dip and then an up. So not there. You get a dip and then up. Okay, so after the dip and the up, what do you get? You get a drop, big drop. What do you get here? You get the same big drop. This is a W as well here, just not labeled. Right, so you get that big drop. After getting the big drop, it retraces about 50% of the whole swing. It retraces also about 50% of this whole swing. What happens after the retracement? It goes down. What happens after this one? It goes down. Then what happens after it goes down here? You see what's happening on the left is just being copied on the right. What happens here? That's the same thing. This is why we took this trade the week before the BOE interest rate decision, monetary policy statement. So this is why we took it here. We actually took it based on this pattern here. Let's get the pattern out. You can see that we've got a nice looking Gatli there. So with the Gatli at the 78, this is where we took this trade. We actually took it here, and then this was the day before the morning of before the BOE interest rate announcement. When it was announced, we were already in the trade. We just went up about another 300 pips to the upside. Okay, so that's how we traded this. So now this upside is not done. We're still on the W and the X. We need to complete the X to 180. Okay, so now how do we get the entry point now? I need to zoom in. I'm going to clear out everything now. We are here now. So this is why I always say you need to understand what the patterns are doing. So here, look at this. We had this impulsive move to the upside. You need to be able to identify impulses and corrections as well. If you're an experienced trader, you will know that this is a correction. This is not a move to the downside. It's just a retracement. An impulsive move is something like this with clearly defined candles like this to the upside. Okay, but after an impulse, we get another impulse to the downside. So if you get an impulse and a correction, you must get another impulse. Okay, so the impulse and the correction gives you another impulse. This will give you a nice regular flat. What should happen after a regular flat? Remember, pound New Zealand. So this is what we're going to do. So what we're going to wait is we're going to wait for this. If you want, you can sell this short move, but it's very risky because you don't know where it's going to turn. It may make a running flat, because if it makes a running flat, it's going to turn all the way. It's going to turn before breaking this blue line. It may turn here. If it's a running flat, it's going to turn here. But for now, it has already broken this top. It has touched it. So what normally happens is this is what it will do, and it will fool most of those support and resistance traders and thinking that we're ready to go down. The sequence is not done. We still need to go all the way to 180. So this will be a nice entry point if you get it. So this is how you trade it. You wait for an impulse to the upside, and you wait for a flag in the 1 hour time frame. You buy it here, put a stop order or a buy stop above this flag here, and go. Or if you're aggressive, you can take it down here as soon as it breaks this line. Okay, you just need to put your stop loss here somewhere. So that's you're going to trade this one. Pound Audi is a very interesting one. Okay, so that's the trade on this one. Keep an eye on this one. It's a very interesting one. Okay, I said I'm going to discuss Euro New Zealand. So Euro New Zealand, this one has been giving me the runaround, but I know it's just the runaround within a correction. But as soon as we get out of that correction, we're out and we're going. Okay, let me take off all this. Control Z. Let me take off this. Okay, so this is the 4 hour chart. So Euro New Zealand, similar to most of the charts that we're looking at. And I actually took this trade here last year. I don't know if it was last year or beginning of this year. I actually took a trade here because you're anticipating the break of this long-term downtrend. You see what I always mean by wait for an impulse and then a correction? Here's a good example of what I mean by that. To get a confirmation of change in direction of a trend. So if you look at this impulse all the way from where it starts, you will not find any place where you get this clearly defined impulse. Look at this impulse. See how strong it was. So some people will be worried that, okay, this trend was going down and then all of a sudden it changed direction and I didn't get an opportunity to get in. And then you want to buy it here or you want to buy it here. But as soon as you buy it, what does it do? It reverses on you. Then when you give up and it hits your stop loss, you're already given up and then now it starts going in your direction. Why? because this is how the market works. You get an impulse and then you get a correction. So if you understand this correction and only trade when it moves out of when it breaks out of the correction, then you get it right. See here. So this thing has been in a long-term downtrend, but all along this, you never got anywhere where you get an impulse and a correction that is broken to the upside. You will get an impulse and maybe some kind of a correction, but it will never break to the upside. Okay, look all along the swing. You'll see that there is nowhere where it does that. Here, you get an impulse. What happens? It didn't break. It only broke at the bottom. So here, you could have got this nice entry point as well. Okay, your risk reward is even better because you took it here. So this would have been another nice entry point. Okay, so that's how we look at it. So let's look at the analysis on this. So we've got that whole impulse giving us this. Look at this correction now. We are on this. We are trending in a corrective structure, WXY. So this Y needs to end here at 169. Where are we now? We are around 163, 164. Okay, so that's about another 600 pips that we could still trade to the upside. So I've got this ABC in the same degree. I'm not going to go through the whole process again. I think by now you guys can follow how I do this. Look at this correction. This is a running flat there. Okay, we've got a 1, 2, 3, 4. We've got a wave 4 in the making, similar to what we have in Euro, US dollar. We are in the process of building wave 4. So let's check how it looks within the wave 4 at the moment. Okay, so I'm gonna go down lower so that we can look in here. So don't let all these letters confuse you or think that Elliott wave theory is Elliott wave strategy is difficult. It's not if you just look at the patterns. In any case, the brain works better with patterns and pictures than it does with numbers and letters. Right? So your brain works better in color. So this is why, what are we looking at here? So we had a wave 3 here. Okay, actually, the wave 3 starts, it's here, right at the top. This is the top. You can see that the top is here. This is the top of wave 3. So what is happening here? Let's look at this correction. So now we need to figure out what's happening with this correction and when it's going to end. Start with the lower time frame. I've got 1, 2, 3. There's 1, 2, 3. There's 1, 2, 3. Okay, how do I label that? This first swing is a W in red. Second one, it's an X in red. Third one, it's a Y in red. This is red. Actually, is this Y in red. Okay. Now, what we do not know is whether this correction is done. We'll only know if something happens. Remember what I said about Euro New Zealand? You need to get an impulse, a correction that breaks to the upside. If it breaks to the upside, then we're confirming that that trend is done. So what do we have here? We've got this impulse here. And then we're getting this correction here, which is a bit complicated for now. For now, I've got a couple of wave counts that could happen here, a couple of patterns that could happen here. But it doesn't really matter what kind of count I have. All I know is that I am within a triangular correction for now. So what could be happening here, just to show you one possibility here, we could be having this 1, 2, 3 as a W, and then connected by this X, and then we're gonna get a Y here, giving us a W X Y correction, right? And that will be our wave 1, which is an impulse, and then it's our wave 2, and that will be the end of it, and then we go. Okay, but all that does not matter because we do not want to trade here. You're doing this so that you can get maybe a better entry here if you get this one right. So you may even get We do the equal legs here. Here's another possibility. If this is your X, your Y could be something like this. You can get equal legs here. Where you be, look at the equal legs is even right on the trend line, giving you this regular flat. So you'll see that you've got a running flat. A running flat breaks the extreme, but does not break the bottom. So what I don't like about this correction here is that we've got an impulse. This is an impulse. This is an impulse. This is an impulse. I do not see a corrective structure, but the whole thing, the whole pattern itself is a correction. Okay, but normally when you're getting an expanded or a running flat, you should be getting this as an impulse, and this is a correction, right? But for now here, it just looks like all impulses, right? So WX, a possible Y here, but all that doesn't matter because I will only buy. And I see some people, as soon as I send a chat with an idea like this, saying it's going down, it's going up, you just want to buy. You cannot buy without confirmation. And your confirmation should be this, as we will be discussing. The confirmation should be a break to the upside, get a flag, and then you sell there, put a buy stop there. If you're aggressive, you can get a 1 hour close above the flag, and then you buy it. As soon as it moves a couple of pips, move your stop to break even, then you run your trade in risk-free. Okay, so that is Euro New Zealand. Okay, somebody asked for gold. I'm going to go into gold now. Okay, let's look at gold. Let's load gold now. Gold. Where's my gold? My gold there. Right. Right, so gold, interesting. Okay, actually all pairs are interesting. Anyway, so let's go to the 4-hour chart. And I'll show you something that I've shown you ever since I started this webinar about 3 months ago. And this is one of the first pairs that I started analyzing. And this is the power of wave analysis. So look at this here. We've got an impulse. Everything here, you can see it's a correction because it's not going fast. It goes, comes back, goes, comes back, goes, comes back, goes, comes back. So you know that this whole thing is a correction. You just need to figure out how the correction is working, how this correction works. Okay. All right, so now let me first show you why I've got a target of 376 on gold. Okay, look at this correction here. 1, 2, 3. This will be a nice zigzag. So it means this is telling me that the sequence to the upside is not done. Okay, so let me show you. I want to show you all the degrees here until we get to the 376. So watch carefully as I do this. So we're looking at the correction. So, the market is mostly in correction like 70% of the time. So if you do not master corrections and understand them, then it means 70% of the time you're going to be in the wrong. And that simply just means losing your account. So let's look at this. I want to get a nice view just for this correction. You'll just know that from here we've got an impulse. So let's look at this higher time frame all the way down to the lower time frame and how we're looking at this gold and how we know where in the cycle we are, because Elliot wave works in cycles. So look at this here. We've got the impulse and then we've got this big correction in yellow, as I've indicated. Right, so this needs to be equal to that, right? Okay, so that's our highest degree. that we are looking at here now. Let's go to the red. So once you get the higher time frame, the rest is easy because you just fill in. You just fill in. Look at this zigzag in here in red. See, still WX in yellow, right? But under the WX in yellow, we've got WXY. There's a reason, and there's a reason why it's a WXY and not an ABC, and we don't discuss that here, right? So you see, lower degree here, up to the Y. Remember, I've got WX, and then I've got a yellow Y that is not completed. So now I've got a W, and then an X that is not yet completed. And there's a reason why I'm saying it's not yet completed. So we're going to get to that. So we want this to do this, right? We want the yellow to complete. We want the red to complete the down move and then the up move. Okay, so now let's go a degree lower. We're going to go to this degrees all the way to a minute time frame, all the way to an infinite time frame. But we only do degrees up to what we can see with a human eye, right? So you saw that we did the yellow degree, we did the red degree. Now we're doing the green degree. Green, 1, 2, 3. We're getting zigzags, and it doesn't mean that we're gonna get zigzags on every pair. Sometimes you get other pairs. See, 1, 2, 3 under the WX red. Now this is the XY and red. What do I get? Lower. I get a green degree. Now this is I didn't label this because it was just too small. You can, if you want to, and get 3 waves here. Even here, under the red, everything under the red. Look at that. Here, and you can see, and the degrees, you need to have a trained eye. You need to spend a lot of time on the charts to be able to understand which one is the right degree. As you can see, that the rest is just filling in. So now I am on this green degree here to the downside. I am here, and I got this pullback. Where do I anticipate that this will be done? I'm anticipating that this will be done at an area where this is equals to this one. That will complete then okay, we are here actually. That will complete this green here, and then the red down. It will complete the red up, the green up, and the yellow up, and then your move is completed here at 1376. So what is the anticipated area here? This is around 240. Okay, that's what the analysis is telling me. So most of the time I've done analysis where even I could not believe we would get those areas, but never argue with the charts because that's the only tool you have. So let's look. Remember, we are in the green degree. So someone will ask me, why is my W not here? Okay, my answer is because I can see that this degree is not in the same degree as that. This will be, if I put it here, it will be too small. Okay, but another reason is that the only time, from the time this swing starts up to here, this is the deepest retracement. This is the deepest retracement. So you see here, you get a small retracement. It's like pulses. But here, we've got a 3-wave. You get 3 waves to the upside here. Get clear 3 waves to the upside. Then that's why I call that my X. So what am I anticipating? Even this, I don't even anticipate that this will be done here. That's why I need this to be equals to that. Around 240. I've measured it, that this to be around 240. So let's drill in even closer, 1 hour time frame. We're just looking at this now. So we need to know where we're going to buy this. Or sell until we get to 240 if you want to. If you prefer those short moves. So this is why you'll find that most of the time I'm not posting charts, we're not getting trades, because I want to get in at the bottom of the swings or at the extreme of the swings. Okay, so what is happening now is you're getting a correction to the upside. You're getting this correction to the upside. I don't know what you're going to get. You're going to get a 3-wave move, and then you're going to drop. Or even if it doesn't drop in a straight line, you can keep on doing this, getting pulses, going down, getting pulses, break, go down, getting pulses, break, go down, until you get down to this level that we're looking for around 1240, which is exactly what is happening. What was happening here? You see, it drops from the time it drops, makes this small move, drops, gaps, correct, drops, correct, drops. See, it does the same thing every time. Corrects, drops, corrects. Every time it corrects, we know it's going to drop. Okay. But then from here, we didn't know how far it was going to go. When it gave this deep correction, we thought then we got this target here that was going to get here, right? So then what happens? You get a deeper correction that I was talking about. Look at it. Look at here. This is the deepest. This is the deepest retracement from the start of the swing all the way down here. That's how you know, right? So you get this 3-wave move. Okay, you obviously sell the break of this trend line because your trend line is going to be like this. Obviously, you're going to miss a bit of a chunk here, but that's fine. Right, so what else? What is happening now? The same thing is happening that we've been talking. How many times did it happen? 1, 2, 3, 4, 5, 6, 7. We are here now. So I'm still anticipating. I do not think that this will break here now. I'm still anticipating it downside. So that's why, if you remember, on Euro US dollar, I said we are currently on a wave 4 going to the upside. We're going to complete the move to the downside. So Euro and gold are correlated. They go in the same direction. They're directly correlated. So this is why I'm anticipating that gold will do the same thing. But in any case, it doesn't matter. If it breaks, even if it breaks here, where we do not anticipate, if it breaks here, we're going to change the wave count. We're going to do an alternative wave count, and then it will go. But I don't think it will break here now. It will slide and go up slowly, but eventually it will break. Most likely at the trend line. Okay, and then when it does that, we sell, and we are on the 1 hour time frame here. Okay, so we do not necessarily, and here it's deep, so we're not necessarily going to wait for it here. So we're just going to get maybe a 1 hour candle close, a clear close outside of this flag, and then we sell. And this quite a number of pips, but risky pips because reversal is imminent. But we are currently at 288 up to 240. That's about 480 pips to the downside. So you can still trade that. Okay, so that's gold. Let me look at US dollar ZAR. US dollar ZAR. US dollar ZAR has got some correlation with US dollar CAD, so they also do the same thing. Okay, you'll see that from the moment that US dollar CAD, we sold US dollar CAD, we didn't sell the ZAR. We sold USD CAD. Also, USD ZAR is also going to the downside. So let's go to the higher time frame and see what we were thinking. We had 2 possibilities, and both possibilities had the potential to make us money. And we did make some money, right? So as I said, it's all about understanding patterns. It's all about understanding pattern. So you can see that from the start of this, from the start where market data is available, US dollar ZAR has always ever been on an uptrend. It had never corrected until January 2016. January 2016, yes. January 2016, that's the only time where we had this big correction. So what we are in now with the US dollar ZAR is just a correction. Okay. So I remember in 2006, US rand to dollar was about 6 rand, but today it's 13 rands. Okay, so it has always been in an uptrend. Okay, but let's understand the correction now. What's happening with the correction? I want to try and get the whole correction on one screen so that we can identify it. Okay, forget about the labelings. Forget about the labelings. So let's do the patterns. What do I have here? I've got a zigzag in yellow. What do I have? I've got a zigzag in red. I'm gonna label it in red because this correction is in the same direction of the trend. What do I have here? I'm anticipating that. I was anticipating that I'm gonna get another zigzag, and then go down, right? But the market changed a bit. The structure changed. So instead, I actually thought that we're gonna get this fractal here. I thought that we're gonna get this fractal, and then we go down. So we sold. We did make some money, right? But what it eventually turned out, it then looked like it was going to make a triangle. If you look at this, they look like a triangle A, B, C, D. And we bought here from D, anticipating that it will make a E. But then it also broke the triangle after we made a couple of pips, a couple of 100 pips here. So you see, even if you do not know 100% which pattern it is, you're still making money as a trader, right? So what do I now think this pattern is gonna do, right? So let me just put on this big outside correction, the highest degree here. So what we have here is a 1W, right? It's a 2X, and then it's a Y. Y will be here. Okay, and then underneath here, you're gonna have the yellow degree. Okay, the red. This red is actually the yellow degree, right? It's actually the yellow degree. Okay, so that's what we're anticipating. So I want to come to this area to see what needs to happen with the ZAR, because my overall target on the ZAR, US dollar ZAR, is 11 rands. Okay, so we are here. We thought this was going to be a triangle, but it looks like the structure has changed like this. And something else that you must check patterns that have happened in other pairs. So if you go and check on pound yen, we had something like this. We had this up move like this here. And after that up move, we got this. You see, this is an expanded flat here. This is an expanded flat. And then after that expanded flat, two things can happen here. What should happen? We wanted this to be equals to this. Okay, let me check if we have reached that equal X. Let me check if we've got that equal X. Not quite. We're supposed to be at around 1382. Okay, between 1382 and 1408. And if we do get that, that will give us a nice 3-wave move like that. Okay, so we don't know if it will reverse from there. But remember, we still have this whole pattern is still 1. So here's another possibility. So another possibility is this one here. That this makes a 1, this makes a 2, and then this makes a 3. Where is this coming from? This is coming from, remember what we just did now, an impulse, a regular flat, and then an impulse, which we want to complete here. See. All right, so there's a number of possibilities here, but to confirm reversal, we still need the a strong impulse to the downside and a nice correction. Then we'll confirm that we are ready to go down. It may turn here, or it may break this one. So if it breaks that one, so if it comes and breaks this one, what do we have? We've got an impulse. The whole thing is a correction. You've got another impulse, and then you go down. So this one is the one that is mostly likely. So US dollar ZAR may still go to the 1382, 14 rand area. Okay, and then we can then get, as soon as it breaks, remember what I said, when it breaks the extreme, it usually reverses with a strong impulse. So you will get a strong impulse and then a correction, and then you know that you're ready to go. Here, this one, currently where we are, I'm going to go into the 1 hour here. It's not convincing. Even the one on US dollar CAD is not going strongly. It's not as strong as we want it to be. Okay, this impulse is not very strong. Okay, but we are on the way down. So there's no nice entry here. There's actually no real trade. So what it could still be doing is this. We've got an impulse, and then it gives us a 3 waves. After the 3 waves, we still go to that 14 area. Similar, US dollar CAD can do the same thing as well. But it looks like US dollar CAD has already reached its equal legs, so it will be done. Okay, so that's US dollar ZAR. Any other chart that somebody wants to discuss that we did not cover here? Okay, let's see which one else we can look at now. Let's look at oil. Okay, EuroCAD. I'm going to look at EuroCAD in a bit. Peter, you're late. We've already done Euro US dollar. You can just watch the video if you came in late. Okay, let's do EuroCAD. Let's see what's going on with EuroCAD. Okay, so EuroCAD I covered in the last webinar that I did 2 weeks ago. I do not have a specific trade at the moment, but I actually bought it too early. I got stopped out on this one. So if you watched last week's video, this is what we discussed. This is what I'm anticipating, and what I'm anticipating on this pair is still long term. I'm not planning to trade it anytime soon. So I've got this impulse to the downside here. Okay. So after the impulse, I get an impulse, which is the start of the correction A. So this move here is giving me a B. So this B, I do not know whether it's going to make a running flat. A running flat does not break the extreme of this low, but it has already, a running flat breaks the extreme of the impulse. It has already broken it, but it does not break the what is this here? The B. Your B is supposed to be here, actually. The start of this swing. It's not supposed to break this if it becomes a running flat. But if it becomes an expanding flat, it will come here and do this. Not this one. The purple one. It will come here, and then we're going to get a reversal from there, from that area. So this is on a higher, this is on a daily. You can see that I'm looking at it on a daily time frame. Okay. So that's EuroCAD for now. I'm going to go down lower to see if there's specific trades in the lower time frame. I'm going to go down 4 hour. But for now, I'm anticipating that it comes down here. If it does come down here, then we're going to be buying it for many, many pips to complete this impulse, expanding flat, or if it's not expanding, it will be running. It can reverse anyway, right? But I would like it to be expanding, then I get a better risk to reward ratio. Let's go 4 hour time frame. After this, we'll do 2 more charts and then we're done. Okay, let's look at something here. If you're a pattern trader, you could have made a couple of bucks here. Because look at this here. You can go and confirm. This confirms with the rules of a cipher. Look at this here. You could have traded this cipher. No, actually, it is not a cipher because it breaks this X. Okay, here's another lesson on patterns. This pattern is not valid. I wanted it to be a cipher, but it's not valid. Okay. But at the moment, I don't have a clear structure on the EuroCAD. So for now, I'll just leave this one alone. Just leave this one alone for now. Let's just see what's happening here. So for now, it just looks like I've got an impulse here and then it's correcting here. I do not know what's going on here. So for now, I just leave it as it is. So normally when the structure is not clear, you wait for it to play out so that it can be clear for you. Okay, oil, upside. Oil target is about 53. Go for hour. Oil has got the clearest structure. It's so easy to trade oil. So I want to explain the rationale, the higher time frame, the higher degrees. You'll see that we've got a W, X, and I'm anticipating the completion of the Y there. So here what I have is a clear 3-wave structure. I get an impulse, a clear correction. I just want this to get to get here. Then I have this equals to this. But it's a bit too late to enter oil now because we're getting into the reversal area and the blue box with the target of 53.86. Okay. So on the 1 hour, looks like if you had an impulse, you're getting a small correction, you could get something like this. Then you get the somewhat what looks like a flag, and then it comes and completes that move to the upside to the 53.86. So oil is 53.86. Maybe just look at NZD CAD that we once traded as well. It's got something interesting as well. There's something interesting on US dollar CAD, but I'm not gonna dwell so much onto it. I'm just gonna show you a big pattern that's happening on the 4 hour or daily. And it's looking quite good. So this line here, this trend line here is a daily trend line. So one of our students actually sent us this pattern. You can go and verify the fib levels because patterns work with fib rules. You just need to have fib rules. If you go check, this should be at 50%, this should be at 88%. Let's just quickly check that now. %88 has a buy area. Okay. This is the 50%. I don't have the 50 fib. I can just put it on. 50 pip, that tells you it's a bet. So a bet reverses at around 50%. You can see here it's at 50%. Here's exactly at the 88 where you could have bought it. So this should go all the way. A bet target should be like this. A bet is a 3-wave. So if we're looking at this as a bet, this is your impulse XA move. This is a B, and then your target. This move should be equals to this move. You can just count how many pips you still have to go here, all the way up to 1. Okay, and this is a 4-hour chart. There's still so many pips ahead here. Okay, so let's go lower. I'm gonna go through maybe a couple more pairs in the lower time frame. So what I was thinking here was that when I took it here, it made an impulse, and I thought it was making a 1, 2, 3, 4. But if you read the rules, Elliot, the rules of an impulse, wave 4 should not come in the territory of wave 1. But look what happened here. Okay. But this structure still looks good for a 1, 2, 3, 4, 5. Okay, but then this is where your discretion comes in. Remember, there's a difference between a theory and a theorem. Okay, a theorem is an axiom of statements that are accepted as fact, been proven and accepted as facts, right? And then a theory is a set of ideas that have been accepted, but not necessarily as a fact, right? But this is where you need to use your discretion, whether you can invalidate this wave count or you need to relabel it. But for now, we know that the move is to the upside. So if you have not entered it, if you have not entered it here, if you have not entered it here on the break of this flag, here is a nice deep retracement. Let me get my pen out. Here's a nice deep retracement. You could have already missed it here when it bounced off. But normally, I do not like a wave 4 that retraces more than 50%. I like it to just retrace 38%, and then it goes to wave 5. So as soon as it goes more than 50%. I do not like that as an impulse. So my count may change, but for now, look what it is doing again. It's giving you a nice flag. It may give you this 1, 2, 3, 4. 1, 2, 3, right? But for now, you can just hold it and anticipate that that target of about, I can't remember how many, there's 500 pips or so. Okay, but I do not like trading these slow moving pairs. Okay, but it's got CAD in it, so it should move quite a bit fast. Let me see if there's any other one I can cover quickly. Cat Chief, interesting one as well. Cat Chief, trying to cover all this chart as many as we can. Look at Cat Chief. it's not moving as fast as you wanted it to be. We've got a clear wave count on cat chief. So at the end of the ending diagonal, we anticipated that we're gonna have a down move, a down move like this. We were expecting a clear ABC where this is impulsive, then it retraces and then it goes. Okay, but now it's not going down impulsively and it's going as a 3 wave. You can see this is 3 waves. It's not 5 waves. It's 3, 1, 2, 3. It will do this. It will correct. Then you'll get an opportunity to sell it here. So you wait for this one to correct, give you a deep correction so you can get the B. Then you can sell for a leg that is equals to that. But you can see it moves slowly. It moves pretty slowly. Okay, look at this. It breaks, corrects, breaks, corrects. It's doing the same thing again. But here you may be caught out because it's going to break and maybe give you a deep correction to go to and form that B that we're looking for to do this. Okay, Bitcoin. That's the last one. I'm doing Bitcoin lastly. So since I did this 2 weeks ago, I have not changed my labeling. So this is how we adjust. So this is the nice part about Elliot wave. So the last time I analyzed Bitcoin, because I'm not trading it at the moment, I'm waiting for a lower price to take Bitcoin and take it on a long term as well. So this is how we adjust. So this is what I had last time. So this was before anything on the right hand side played out. So what I come and do here, I see that I've got a 1, 2, 3 waves. It's W. My 3 waves is W. Okay, and then I get a correction. That's my X, and then I still need to get my Y to complete. You see, I'm already done with my analysis here. So that's what I do with all the pairs, because I already have the wave count for the whole cycle, not just one string. So if you've got only one string, when circumstances change, you have to change the whole thing. So here I don't change anything. I just adjust. So W, this will be X. So we may get here to the blue box. Then I will get my 3 waves that I'm anticipating, which is WX, which is WXY. And I am looking to buy Bitcoin around that area. When this breaks, gives me a flag, can sell all the way down. Okay, what will this give us? This can even retrace. Remember what I said? This is the extreme of the wave. So this can come and break this, come all the way down. Doesn't have to do that. It can give you a zigzag as well. It can turn here on the 3 waves and come here, break the extreme, and then reverse. So around 3,000 area would be a nice place to buy Bitcoin for a long time. Okay. Then this whole thing is a 1, 2, and then a big 3. This big 3, this whole move that most of us missed, then you can get another big move here, long term. So Bitcoin is long term bullish. Okay. Right. Let me check the question on the chat box. We don't have much time. We've ran way too long. I think it's more than 1.5 hours now. Okay, so I'll do the Euro JPY, GBP JPY, Audi JPY separately so that I don't have this video being so long. It's already an hour, over more than an hour. So thank you all for joining for all the states throughout the webinar. I will be sending out this on YouTube. I'll send out the link. Okay, I'll send those £3 pairs later. Thank you for joining me. Hope you enjoyed it. Or if you want to contact me, you can find me on Facebook. My name is, let me just put it out there on Facebook. Let's put it in yellow. Which color can we use here? White. I'll just do it with this one here. I'll just do it with a pen. So my name is Andy. I can't even write properly with this thing. Okay, let's do this. Andy IVHU. That's Ndibuo Victor, VICTOR. You can find me on Facebook. And you can also find me in any other social media like WhatsApp, Telegram on this number. If you're international, the code is 2782796. If you dial this straight into your mobile, it will come straight to me. So that is my number on WhatsApp. This is 79. It's 9. All of these numbers will come to my mobile, and I'll tell you about our premium group and our Telegram channels. Okay, thank you. I'm going to post the recording now. For those that are still here, if you want to ask any questions, I'll give you an opportunity. But otherwise, this is the end of the webinar. Thank you for joining. Cheers. Bye-bye. Okay, so let me just correct the number there. I've resumed the recording. It's 324 plus 2782 7966 324. Thanks for the clarity. Plus 2782 7966 324. That is my number. Thanks, Jess.